What are trust fund taxes? The term trust fund taxes can have two different meanings. Generally speaking, it is a tax associated with using or benefiting from a trust fund. More specifically, in the United States, it can refer to funds employers withhold from paychecks and keep in trust before submitting them to the U.S. Treasury. These funds cover the employee's income taxes, and employees may be entitled to a partial refund at the end of the year if excess money was withheld. Likewise, if tax estimates were incorrect and the employee owes more, the balance will have to make up. In the sense of taxes associated with a trust fund taxes are tax liabilities incurred through use of a trust fund. Such funds are usually set up in a way to avoid as much tax liability as possible, with people only being taxed on funds they use instead of on the fund as a whole. The precise tax requirements vary depending on the type of trust in the nation. People who benefit from trust funds should check with accountants or personal finance advisors to get specific advice, as there may be steps available for decreasing the tax burden. Administrators of trust funds are responsible for maintaining the fund responsibly, making sound investment decisions to grow the fund, and distributing the funds appropriately. They must keep detailed and accurate records and may need to take steps to protect the interests of beneficiaries. Having a knowledge of tax law can be helpful for people concerned about administering a fund fairly, or advice can be sought from an accountant to make sure the fund complies with the law. In the case of withholding, trust fund taxes are withheld by government mandate. Employers must take some money from each paycheck to cover estimated income taxes along with other government funds. They are required to hold these funds safely until they are due, at which point they are sent to the Treasury. When employees file tax returns, they provide documentation on the amount of money withheld, and this is used to determine if they owe money or deserve a refund. If an employee does not deposit trust fund taxes after withholding them, this can be grounds for serious legal penalties. Employees concerned about whether their trust fund taxes are actually being paid can request documentation, and this may be advised if a company is in financial trouble. Companies with late payments can be subject to action from the Treasury, including an audit and an immediate demand for payment.